Welcome to the Honest Money Show. Thanks to our sponsor Bitaroo for making today's episode possible, Australia's biggest Bitcoin-only exchange. Hi, joining me today is Jonas Benner. Jonas Benner is a quant at AMP, and he played a key role in AMP investing. I think they started with 27 million and then increased that to 50 million worth of Bitcoin futures last year. I remember that was circulated in the news, and I didn't know that this is the man behind it. Then you did a talk at Bitcoin Alive about this, and I know that some of your colleagues also came to support you. Since then, you've also traveled to Prague to speak at the 2025 conference there. I listened to that as well. I've done my due diligence. And then finally, you were on a podcast with Shane Oliver, which I absolutely loved because it was just such a great conversation between such a respectable economist and someone who's, quite young in the company and an expert in Bitcoin. And the conversation was just so good to listen to from both sides. So, Jonas, welcome to Honest Money.
Thanks for having me, Anja.
Yay!
And just before we move on, actually, I'm not the only one at AMP who's behind the Bitcoin allocation. I would say in the initial allocation, I probably actually played a minor role. It's probably my boss, Stuart Elliott, who came to Bitcoin Alive as well. He was heavily involved, and because he's the head of portfolio management, his word obviously carries a lot more weight than me just being a quant within the investment team. So he's a Bitcoiner as well, and he was very involved in making that decision. And then our CIO, Anna, she was also super supportive of it. So there was a whole team at AMP that was supportive of it. I just happened to be the Bitcoin maxi who's been doing a lot of the education and stuff and pushing Bitcoin a fair bit. But just wanted to make that clear.
I love it. And I'm glad you said that because this is also the discrepancy I picked up on, because during Bitcoin Alive, you did give a lot of credit to your team, but then it was actually Shane that said that you played the key role in his podcast. So I'm like, which story is true? But it doesn't matter. I love your humility. And I'm so pleased to hear that there is so many people in such a large Australian institution who's, very mainstream, starting to be open-minded to this, up-and-coming asset class. It has been around for 16, 17 years now. And, we've moved past this being, a speculative or a internet sort of magic token to something that is really gaining institutional interest worldwide. And I would love to hear, maybe start with your personal journey into Bitcoin. How did you, what made you, what made you become a Bitcoiner essentially?
Yeah, that's a good question. I first really was exposed to Bitcoin in 2016. I was doing an internship at Deloitte in Germany at the time. I just got done with my bachelor's, was doing an internship. And at the time, Deloitte, I think it was based in Berlin, they had a blockchain center. And they came to Düsseldorf, which is where I was doing my internship, to give a presentation about Bitcoin. And I had never heard of Bitcoin at that time, but a lot of the other recent graduates who were working with me were like, "Oh, Jonas, you should come along. They're going to talk about Bitcoin." I was like, "I don't even know what that is, but yeah, sure, I'll come along." And then went along to the presentation, and it was really, really interesting. But because I'd never heard of it, everything that they said was completely foreign. But they focused really heavily on explaining what the blockchain was and how it worked. And that kind of clicked to me, and it seemed kind of cool. But then the problem was a lot of the partners at Deloitte who I was working with were throwing super critical questions to the team that was presenting about Bitcoin and blockchain. And because I didn't really know much about it at the time, and I really respected the opinions of, the partners who I was working under, because I thought they were super smart and had it all figured out. I started being critical of it as well, because I was like, oh yeah, I kind of understand why blockchain could be revolutionary, but this whole Bitcoin thing, I'm not sure about, and just completely dismissed it. And then My brother started getting really into it. My younger brother actually started getting really into it in 2017 and like kept telling me about it. But I was always like, still a bit skeptical. And then only in 2020 did I really, like during COVID, start really paying attention to it and listen to my first Michael Saylor podcast on the What Is Money show with Robert Breedlove. Listen to the whole Sailor series in lockdown because I had nothing else to do, and it clicked a bit more. But at that time, that's when I first started investing in Bitcoin. But at that time, all the other altcoins seemed really interesting to me as well. And I was listening to podcasts by Charles Hoskinson, the founder of Cardano, and thought he sounded really brilliant, and what they were doing was really cool. I was also, because I'm a programmer, I started teaching myself Solidity, which is the smart contract language that you use to write smart contracts on Ethereum. So I was really into that whole thing. And then I think only late 2021, early 2022, when I reread the Bitcoin standard for the second time, something clicked and I was like, whoa, whoa, whoa. Bitcoin is the only thing that really makes sense. Bitcoin is the only blockchain that really tries to solve a real problem that we have and potentially the biggest problem that we have in the world, which is fixing the broken monetary system that we have and introducing honest money. I mean, that's the whole name of your show, something that can't be manipulated, something where dishonest actors can't take control of it and abuse their power over the population, something where we have a more equitable, more egalitarian money again, and really understanding all of that. And I was like, wow, okay, Bitcoin is a thing for me. And since then, it's been Bitcoin only.
Yeah, I absolutely love that story. And, I've heard you talk a lot about the monetary history. Some people find that particular subject so boring, but I feel like for me, that was one of the big light bulb moments in seeing in how Bitcoin fits into that entire evolution. So I would love to hear you explain it. How,
Yeah.
like, you can pick however many centuries you want to go back.
Well, you probably have to go back pretty far. And before I get started on that journey, I think you're completely right. I think without understanding the history of money and why monetary goods have monetized in the past and why maybe one good replaced another form of money that we previously used, like why all of that happened, if you don't have that understanding, it's really hard to understand how Bitcoin fits into the whole picture. Because Bitcoin has superior properties to the last freely chosen money that we had, which was gold. But if you don't understand why we even ended up with gold, it's really hard to understand why Bitcoin is so promising. So that's the first thing I want to say is you don't just need to understand what the history looks like. You need to understand why it evolved the way that it evolved. It's really important. So, I mean, if we go back really far, humans basically started off bartering. We used to trade, I don't know, chickens for apples or bananas for bread or whatever. But bartering is really inefficient because of the double coincidence of ones. Basically, that trade only works if the person that you want something from also wants something that you can offer them.
At
So
exactly the same time.
at exactly the same time, exactly. And then if it's goods that can perish, then it's really hard because if you have bread now, but somebody only wants bread in a week, then maybe your bread is moldy by the time that you can buy the apples from them with your bread. So that's why it's really inefficient. And then what humans did over time is they always converged on something that was the most tradable good within their small society, something that everybody wanted and that was in the highest demand from everybody, that was easily tradable. And the interesting thing here as well is that this money that evolved that we're talking about now was never centrally controlled or issued by any government. It always came to be because people naturally chose it through free market competition and by playing basically game theory in their head, like trying to figure out what's something that I could trade my goods for that a lot of other people will want in the future as well. And then through this game theoretical thinking, converged on the most tradable good. But nobody centrally controlled that. That's the amazing thing about money. Money itself doesn't have to be issued by the government. This is only something that's been happening in the last, let's say, 100 years, where governments basically force us to use whatever they issue because we have to pay taxes in that money. and because they've built a whole system around that money. But money in and of itself is not equal to currency. Money is way broader than just currency alone. That's really important to understand as well. But to go back to the history, we then were using things like seashells, glass beads. Some societies were using cattle or salt. They were using salt blocks as well. And then what happened is as humans spread out over the world, and as we became more technologically advanced and had ships, could sail over the world, all of a sudden societies that were using different forms of money had to compete with their form of money with each other. And what often happened is that, especially when Europeans arrived in, let's say, Northern Africa, or it probably happened in other places as well, where the societies that they encountered were less technologically advanced than they were, and they were using, let's say, seashells or glass beads as money. The Europeans then saw that they were using this form of money, which they could either easily collect in the case of seashells. They just had to take their ships to the beach, collect heaps of seashells, then go down the river inland again, and they could basically appropriate everything from the societies to them because they had a near infinite amount of money. Same thing with glass beads. There were North African tribes that were using glass beads as money, and then Europeans discovered that and went back to Venice, where they had perfected like glass manufacturing and creating glass beads already, just created millions of them, then took their ships back to Africa and just bought everything of them, leaving them with worthless glass beads. So, and as you can see, then what always happens is that if one form of money is inferior to another form of money because it can be more easily inflated by a more technologically advanced society, then that form of money will go away because it will become hyperinflated and worthless. We see the same thing nowadays with hyperinflating currencies in especially developing countries. And then what happens over time is the whole world converges on the one good that is the hardest, basically the hardest form of money, because that's a really important property of money, is that it is hard to inflate. That's what we call hard money, that is resistant to inflation. And gold was just the thing that fulfilled that property the best. It also fulfilled a few other properties the best. Like it was fairly divisible. It was super durable because gold doesn't rust or perish at all. And it was widely recognized and had network effects because Europeans were using it. So at some point we converged on gold, but mainly because it was the hardest to inflate, because it's really hard to find more gold. It's hard to dig it out of the ground. You have to find it, dig it out of the ground, and actually convert it into pure, real gold, which no one can easily do. No, we still to this day haven't figured out alchemy. I know that there technically is a way to make gold as a byproduct of mercury, but that gold is highly radioactive. So to this day, we still can't make gold in a lab. Maybe that will change one day, and that will then be an even stronger case for Bitcoin. But at the moment, we can't. So that's why we ended up with gold at some point, because it best fulfilled the key properties of money. It was divisible, portable, scarce, fungible. So one, unit of
Durable.
gold is equal to another unit of gold, and durable. So those are like the five key properties. There's probably a few more, but those are really the five key ones. But then the problem with gold was that when we started getting even more technologically advanced and trade was starting to happen globally, and we started getting communications networks where we could send information at the speed of light, there was a disconnect between how fast trade could happen and how fast the monetary good that was facilitating that trade could happen. So gold could only travel as fast as humans could travel, but information could travel faster. So all of a sudden, there was a big disconnect between the money that we were using and its speed, its salability across space. So there's salability across time and salability across space. Two really important things as well. The salability across time is really about how well your money keeps its value over time. So you can basically convert your time and energy now into money, and then carry that value into the future without it losing any value. That's the salability across time. But the salability across space is how easy it is to send that value over the entire world, in a couple of seconds to match the speed of trade. And gold wasn't fit for that. And the other problem with gold is that it carried a lot of value in relatively small units. So it was actually pretty dangerous to try to transport larger amounts of gold over the country to, make big purchases or do big trade because you could get attacked by a group of robbers, like armed robbers. And if they stole your gold, because it's a bearer instrument, they would confiscate all of your wealth from you. So there were a few reasons why we then decided to go off using just pure gold as money. And initially, we had a pretty good solution to that, which was that banks and eventually central banks said, like everybody just give us the gold. We will hold it for you in a really secure vault, and we will issue paper certificates against that gold, which you can use as money, but you can also always redeem it for your gold that's sitting in our vault. And that was a really good solution because it overcame the divisibility issue of gold and the usability issue of gold because paper certificates were a lot easier to trade and you never had to walk around with all of your gold. And then the problem was that once you centralize something and have somebody hold that and custody it for you and issue paper certificates against that for you, you run into a trust issue where you have to trust that the issuer actually honors redemptions when everybody wants to redeem their paper certificates for gold, that they actually have the gold and give it back to you, but also that they don't just print more paper certificates than they actually have gold. And that was the first problem because they started doing that because banks realized that not everybody was coming to convert their paper money back into gold all the time. So they were like, oh, what if we just create a little bit more paper money than we actually have gold? Nobody's going to notice. Nobody's going to, do a bank run on us. And then at some point, that started getting really bloated up where all of a sudden there was so much paper certificates trading relative to gold. And especially the US was doing that during the Vietnam War, where, okay, actually, I have to circle back a little bit to explain what happened there, which is the Bretton Woods Agreement. So we had all of that where paper certificates were backed by gold. Then Second World War happens. And at the end of the Second World War, the leaders of, I think it was like 150 countries met in this town in the US called Bretton Woods, where they decided that the new post-World War II monetary order would be the following. The US would back their US dollar with gold, and every other major currency would back their currency with the US dollar, knowing that they could always redeem those US dollars for gold. So basically, we had this paper certificates backed by gold with the US dollar, and then every other currency was backed by the US dollar, which was backed by gold. So it was like backed by gold with an intermediate step of the US dollar in a way. And then what happened during the Vietnam War in the 60s was that the US was spending way more money than they actually had gold. And in order to keep the war going and to keep financing it, they were just printing more and more dollars without actually having more gold. And a lot of European countries were catching up to that. And I think the French government was the first one to try to call them out on what was going on. And they actually took a warship and sent it over to the US, like full of US dollars, and demanded to get their gold back. And President Nixon realized that a lot of countries had already been doing that. And the US, I think, went from 20,000 tons of gold that they were holding down to like 8,000 tons or something like that. And he realized that if they would keep redeeming the US dollars that foreign nations held against gold, the US would soon be out of gold, and therefore the trust in the US dollar would probably be lost. So he told the French government to go back to France because they're not going to get their gold, and that he's ending the convertibility of US dollars to gold temporarily. But that temporary pause has lasted until today. And since that day, money hasn't been backed by any commodity. It's been backed by trust in the issuer of that money. And we now have what's called fiat money. So that's how we got to today. I know that that was a long history lesson there. But the important thing to understand there is, I think that money doesn't have to be something that's issued by the government. It's usually something that's chosen by the people freely, and it's chosen because it has the best monetary properties. And one of the key ones is how hard it is to inflate. And then the second thing to understand is that the money that we use nowadays, the government forces us to use, and we're not choosing it freely. And this is where Bitcoin comes in because Bitcoin is kind of like gold, but in the digital realm, it has all of the properties that gold has, but better. It's gold that you can send over the internet in a way. that nobody controls, that nobody can inflate, that you can store your time and energy in without anybody arbitrarily debasing it. And in a way, it combines the best properties of gold with the best properties of fiat, because just like fiat money, you can send it all over the world in seconds, but you don't have the problem that central banks can just print more money and inflate your currency or your holdings away. And you have the best properties of gold, especially the hardness of gold, but you can send it over the internet. That's basically why Bitcoin is such a brilliant solution, because Satoshi kind of realized that fiat overcame a lot of the shortcomings of gold by being more fit for this global hyper-connected economy, but sacrificed the key properties of gold. And gold had a lot of key properties that fiat money didn't have, but wasn't fit for this new world. So he was like, let's just create something that fuses the best properties of both and isn't controlled by anybody, so nobody can ever mess with this money. Hence why it's honest money.
I love that you keep saying honest money throughout. Thank you. But yeah, I remember reading somewhere like the history of central banking as well, how even before the Fed was established and going back many, many centuries ago, it was essentially initially implemented to try and standardize the gold. So to ensure that the gold that was being traded between people was genuine gold. They didn't have some other metal in the middle and it was gold coated. And so that sort of centralization happened over many, many, many years to get it to what it is today. And I think I also read, I want to say Lynn Alden's book, where she wrote that the first time in human history where a softer money won was with fiat. And
Yes.
do you want to explain fiat, just in case? I don't think I have explained it in previous episodes, but I do mention it a lot. What is
Yeah, so
fiat?
fiat, I think the word itself just means by decree.
Yeah.
So basically, it's money because the government says so. It's not money because people choose it to be money. That's what fiat money is. But fiat money is, for everybody listening who doesn't know this term, is just the money that we use every day. So Australian dollars, that's fiat money. US dollars, that's fiat money. Euros, that's fiat money. The money of today is fiat money. Whereas money itself, the concept is much broader than that. And actually, I think making the distinction between maybe the best distinction to make is between money and currency, because we nowadays use currency and money interchangeably as if they're synonyms, which is why a lot of people think that currency that they use nowadays is also money. But when you think about the concept of money itself, and there's actually a really good book, I read it in German. I've read it 3 times now because it's that good. And do you know Gigi, by
Yes.
the way? Yeah.
Yes. No, not
He's
personally, but of
yeah.
him.
No, of him. Yeah, no, I don't know him personally, unfortunately, either. He stays very anonymous. But to anybody who doesn't know this guy, he's an Austrian Bitcoiner, and he's done some of the most amazing writing in the Bitcoin space. He has a website called DerGigi, like DERGIGI.com, with some of the best articles on Bitcoin. Like reading those for me was mind blowing. Like there's one where he talks about proof of life, I think is what it's called, where he talks about Bitcoin, potentially being like a living organism. Anyway, he recommended this book called in German Vom Gelde, which in English translates to On Money, or The Essence of Money, I think is what it's called in English, by Argentarius. And this was written in 1921. So like during the Weimar Republic time in
Mm.
Germany. And this book is by far the best explanation of money that I've ever read, and what the essence of money really is. And basically, the distinction that he makes there is that money essentially is just a claim on value that you get, but if you have provided value, but you haven't received anything in return yet. Another way to say it is that money, the money is just value, but currency is the representation of that value. It's the units that that value is divided over. But when you think about the concept of money that way, you can probably also think about it as the aggregate purchasing power in an economy. That then means that if you think about money just as the value that has been created, and as currency as the units over which that money is divided, then it's all of a sudden really easy to understand how the government can't actually create any more money. They can create more currency. But all that that does is it takes the money that already exists because they haven't provided any value when they print money. They just take the value that already exists and divide it over more units. So while they print more, money units, they don't create more money. It's kind of like thinking about a clock. Like if you think about like an analog clock, I could add another line to that clock and say, okay, now my clock has 13 hours of, going around. So 26 in the whole day, but I haven't created more time. I've just created more hours, which is a measurement of time. It's kind of the same thing for money. And once you start thinking about money in that way, it becomes really clear why, fiat money is such a bad thing because it's not directly linked to value that we created. It's like because a good money should only come into existence through work as well. You shouldn't just be able to create money out of nothing because we all have to exchange our time and energy for money. That's the only way that we can get money. So wouldn't it be fair if everybody could only get money if they provide value as well? And there's not one central party that can just print money out of thin air for nothing. And then again, I said printing money, but they're just printing currency, not money. And that
Mm.
making that distinction for me when that clicked was brilliant.
Start saving in Bitcoin with Bitaroo, Australia's biggest Bitcoin-only exchange. Bitaroo offers easy tools and advanced features. Join thousands of happy users making their first Bitcoin purchase today. Download the app or visit bitaroo.com.au. I really like the clock analogy. I'm going to use that.
Yeah, yeah.
Yeah, that just clicked in for me. Yeah. But I also wanted to ask you, you mentioned gold is a bearer instrument or a bearer asset. And I wanted to obviously Bitcoin is as well, but how would you define a bearer asset for those who heard that word but don't necessarily know what it means?
A bearer asset is just something that you can truly own yourself. And this, again, is such a groundbreaking thing to have in the digital space, even in the physical space. Like, we don't actually own a lot of things that we think we own.
Hmm.
Like the money in your bank account. I mean, there's that saying in the Bitcoin space that
My favorite.
it's not money, it's not yours, and it's not in the bank. So,
Just a
um,
bunch of
so
IOUs.
yeah, exactly. It's just numbers on a screen. But the money, unless you hold money cash, it's not a bearer instrument either. But then when you think about shares that you own, you don't actually own the shares. You have access to the price movement, or you get exposure to the price movement of that through a brokerage account that you have. But it's not like you actually have ownership of those shares yourself, truly. Even with a property, even if you paid off your house, you might have the property and you might be able to live in it. But if you don't pay, I don't know, land taxes or whatever needs to be paid on houses here in Australia, the government could seize your house. So that's not true ownership either. True ownership and a true bearer asset is something that unconditionally you can hold yourself and nobody can take that away from you. Not the government, not anybody. And with gold, you can do that because you can just put gold in your pocket and walk around. Obviously, there's the risk of somebody trying to rob you and then they can take that from you. But that's the risk with any bearer asset, apart from Bitcoin, if you custody it properly. But that's why having something that you can truly own is so amazing because we don't have that nowadays anymore. All of the things that we think we own were just allowed to. I don't even know if own is the right word. It's probably what's a better word for that? Uh, it's like we're allowed access to it in a way. Like
Yeah.
while we behave the way that the government wants us to, they allow us to have access to it, which feels like ownership, but it's not true ownership. And then in the digital space, true ownership seems even more foreign because how do you own something that is digital? How is that a bearer asset if it's sitting in cyberspace? How does that make any sense? And Bitcoin solves that with really clever cryptography, where you get your private key and your public key, and explaining that for anybody who's listening who doesn't understand that in simple terms. Um, Basically, in cryptography, especially public private key cryptography, which is what Bitcoin uses, how it works is you can get a pair of private keys, which is kind of like a password, like a really long, complicated password that you have, and that is then mathematically linked to a public key, which becomes your Bitcoin address. That's where that's where your Bitcoin is technically sitting. And the private key is what gives you access to that Bitcoin. But they're mathematically linked in a way where if you know the public key or the address of somebody, you can't backsolve for the private key. And that way, as long as you know the private key, which nowadays is easy to convert into 12 or 24 words, like English words that you can just write down or engrave in a steel plate and carry all over the world with you. That is what allows you access to your Bitcoin. And in Bitcoin, having access to the Bitcoin is equivalent of owning that Bitcoin, because everybody who can move the Bitcoin owns the Bitcoin. So that's how Bitcoin is a bearer asset in cyberspace, because the bearer asset in a way is almost the private keys that give you access to the Bitcoin. And that's how Bitcoin solves for that. And it's amazing because now you have something where if you are worried that your government is going to put in capital controls or potentially become tyrannical, and here in Australia, at the moment we're fine, but we never know what's going to happen in the future. I mean, you see a lot of stuff happening in Europe with like digital ID being introduced and them really cracking down on free speech. And the UK, I mean, is probably leading the way, but Germany isn't far behind. But there's a lot of countries all over the world where things are a lot worse already, where governments have capital controls, where you've got hyperinflating currencies, where you can't actually own anything. And even if you own something, you can't take it with you, like your house that you have, in Nigeria or Turkey or something like that. If you want to flee the country for whatever reason, you can't take that with you. But with Bitcoin, you now have a bearer asset sitting in cyberspace where all you need is a bunch of words that you can write down, or worst case, even remember in your head, and you can take millions, even billions, all over the world without anybody knowing. So it's the purest form of bearer asset because it's pure information only, and everything that can be represented as pure information is the purest form of itself if it is represented in information only.
Yeah. A lot of people struggle with Bitcoin not being tangible, but one kind of example I like to use is you can have a filing cabinet at home that's physical and you can touch it, or you can have a filing, a folder on your computer, and you don't necessarily think you don't own those documents or that those documents are not there just because it is in a digital format. So Bitcoin is kind of the same. Like you can always come back and verify your holdings. You can move them, you can test them around, you can come back 5 years, 10 years, 30 years later, they're still going to be there. And I think a lot of people just, need time to make that switch.
Yeah,
Yeah.
no, I think that's a brilliant analogy, actually. No, that's a really good one. But even then, when you think about the the whole moving from physical things to digital things is something that we're not seeing for the first time with Bitcoin. As you mentioned, files. We used to have, like, especially big offices, or, if you think about like a law firm or something like that, like they used to have rooms filled with old files that they would then have to look through. Now they have everything digital, where if you want to find something, you just hit Control F, and then you can look for it, and you can go through a whole database of stuff really easily. So we saw that move from with files from physical to digital, but we've seen it with other things as well. If you think about bookstores initially, what became Amazon, they used to be physical, then they became online. Shopping in general used to be purely physical. Now you can do it digitally as well. Friendships, even, like if you think about Facebook, Instagram, like obviously there's a big physical part of that, but part of it has also become digital. Same with dating, same with movies or music. You used to have it on like a cassette or like
I
a
do miss
CD.
Blockstream. No,
Exactly.
is it Blockstream? Is that what it was called? No. Um, no,
the the
remember
device for.
When you used to go and rent movies from a physical location,
Blockbuster.
Blockbuster, not Blockstream.
Yeah.
Oh my gosh, I'm
Block,
such a Bitcoiner.
Blockstream is Bitcoin. Yeah, yeah. Blockbuster. No, but like exactly when we were younger, like when I was a kid, you used to have to go to like a physical store and then, choose a movie like a DVD that you wanted to rent, and then you'd have to take the physical DVD home. Same with music. When I was really young, for my 10th birthday, my dad gave me like a CD of like an album of a German band that I really liked. Like all of those things were physical as well. Like they had to be stored on physical devices. And now we have Spotify, Netflix, and other platforms where everything is digital. So this whole move from physical to digital is something we've seen many times before. And with money, it's just now the next iteration of money where we're moving from physical gold to digital gold, but something that can actually become a medium of exchange as well. So with gold, we now only think about it as a store of value because it can't be used as a medium of exchange anymore. But with Bitcoin, while it will start as a store of value, and that's the thesis that a lot of people have for Bitcoin right now, it actually has the potential to move to becoming a medium of exchange as well. And just on that move from physical to digital, I think one key thing to understand there as well is the reason why that works for the things that I just described is that when you think about what files are, or what movie or music or even knowledge like Wikipedia and Google and all of those things, what all those things are is just information that can be represented as ones and zeros. Like knowledge is just information. Music at the end of the day is also just information. A movie can be broken down into pure information. So when you think about that, wouldn't then if we live in a world where we constantly want to advance as humanity, that means that we need efficiency and scalability. But physical things are really bad for scaling and for being efficient because you have to create copies of them, like physical copies that need to be stored on something. For information, it used to be a book. For movies, it used to be DVDs. It's really unscalable and really inefficient to get out there to a billion people. But something that is just information, if you represent it as ones and zeros, becomes really efficient and really scalable. So as we advance as humans, it completely makes sense to move away from physical to digital space if it's just information, because why not represent it in its purest, most efficient, most scalable form? But money is also just information. It's like a ledger of who owns what and who owes what to who. That's all that money really is. So it's also just pure information. So why keep that in a physical form when we now have a digital form for it that allows for scalability and efficiency? So when you think about that whole dynamic of information going from physical to digital and money just being information, it's the same thing. It's basically logical that it will happen.
Yeah, I love the chart. I think Anil said so or created it where he talks about that density. So you're starting with books all the way down to 2 terabyte chips. And the same with
Mhm.
money. You have gold and then you have fiat and then you have Bitcoin, which is, yeah, the most dense form of information there is. I really like that chart. I'm a visual person, so I like anything that kind of paints a picture of the key concepts. I wanted to also ask you, because what you said in, I think your Prague talk, you were talking about the way that money is adoption and it follows 4 key steps. I knew of the 3, I didn't know of the first one. And I'm like, that makes so much sense. So do you
Yeah.
want to talk about how it all starts as a collectible good?
Yes, yeah, I will talk about that. And this also comes back to what I just said about Bitcoin and how currently it might be seen as a store of value by more and more people and how it has the potential to move to a medium of exchange. That's how that all fits in. So another thing that you learn from studying human history, but also the history of money, is that those goods that are freely chosen by people as money through free market competition, they tend to monetize in 4 stages. And the first stage is that they start off as a collectible, where people start collecting it for some reason. And back in the day, like for seashells, for example, they thought seashells were beautiful and look good. But they were also kind of rare because if you don't live by the beach, it's hard to come by seashells. So humans had this thing of like valuing beautiful, scarce things. So they started collecting them. But then once enough people collect something, its value rises, its purchasing power also rises. As more and more people do that, because everybody starts seeing that as valuable. And then once enough people collect something, it will actually be a commonly used store of value, which means that almost everybody starts using that to store value. So when they provide value to other people, ask for that thing or want to have that thing because they want to store their value in that thing. And then at some point, that purchasing power rises enough and plateaus where it reaches some kind of equilibrium where it's pretty stable in terms of what you can exchange that store of value for. And at that point, it moves from store of value to becoming a medium of exchange, where it's the thing that is the most tradable good and that everybody uses to exchange value with one another. And then once it's a medium of exchange, it usually simultaneously becomes a unit of account where people start pricing goods and services in that money that they use. So nowadays, if you go to Woolies, everything's priced in Australian dollars. But back in the day, everything would be priced in gold. So if you went to the pub, and you wanted 10 beers for you and your mates, then you would know how much gold that would cost because there would be a gold price attached to those beers.
Yeah. And I learned something yesterday. I was yesterday years old when I learned about the history of like the gold coins and why they have like not gold coins anymore, but why coins used to have and still do ridges to prevent them. I think it would make it easier if someone was shaving off clippings to, try preserve more gold. But the funny thing is those ridges are still there today.
Yeah, true. That is funny. That is
It's
funny.
a bit
We've just kept
ironic.
them. Yeah. Do you know where the term sound money comes from? Like why it's called sound?
Austrian econ? I don't know.
I mean, yes, they are the ones who termed it that,
Yeah.
but I've heard many times people talk about how back in the day when we were using gold as money and we would have gold coins, it would actually be pretty difficult to know whether what you were getting was pure gold or another form of metal that was just laced with gold, something that you just explained. And one thing that people used to do is they would train themselves to recognize the sound that a gold coin would make if you dropped it on a hard surface. And that was a very quick and easy way to verify whether what you just got was actually gold because it makes a distinct sound when you drop it on a hard surface compared to other metals. And that's part of the reason why it's called sound money.
I love it. I love it. I love hearing these like random little pieces in history.
Yeah.
Just to go on a little tangent as well, something that I learnt. I'm reading Robert P. Murphy's book Choice at the moment, and this is where I learnt that Austrian economics came as a derogatory term. It
Really?
was yeah. So it was used in Germany to kind of to yeah, I think it was against Mendra potentially. It was used as a derogatory term because Austria was kind of considered, for whatever reason, inferior, and because it just sort of stuck around. That's what it became later on, and it also reminds me again of how the term maximalism or Bitcoin maximalism again came as a derogatory term from Ethereum folks,
Yeah.
and it stuck around. We're like, we'll take it, thank you.
Bitcoiners and maybe hard money fans, or maybe I guess every Bitcoiner is an Austrian economist in a way, at least partly. Maybe there's something about us where if people try to make fun of us or make us seem, extreme or inferior, um, we just have a way of like finding that funny and just running with it. Like that's how a lot of stuff happens. Like even I think it was Brett Garlinghouse, the XRP founder, who, together with Greenpeace, created this skull with like smoke coming out of it, like really ugly looking. That was supposed to represent how bad Bitcoin is for the environment. And Bitcoiners saw that and were like, wow, this is actually a really cool sculpture. And I think it cost them a lot of money to create. And now at the Bitcoin conference in Las Vegas, I think this year, they were actually displaying the skull because they thought it was so cool. But it was like initially made to attack Bitcoin and, portray in an artistic way how bad Bitcoin is for the environment, supposedly.
Yeah.
And Bitcoiners just ran with it. Same with the term like hodl and like other stuff. Yeah. We, we just like those things. Oh, when people started calling us psychopaths and every Bitcoiner just went with that.
But like to each other, good morning, psychopaths.
Yeah. Yeah.
Yeah, yeah. It's weird because, you know, since I came out of the closet as a Bitcoiner on LinkedIn, it's been really interesting. It is a very divisive topic, and I've met so many great friends from all over the world that you just click with instantaneously because you all have like shared core values. You all want to see a better world, essentially. We're not apologetic about that. We really think that, fixing the money can fix everyone's lifestyle and a lot of the problems that the world is facing today. Not everything, but a lot. But it's interesting how it seems to trigger a lot of people. Like if I was to recommend a movie to you and I'm gushing about it, I'm like, oh, you have to see this movie or read this book. I absolutely love it. Da, da, da. You'd be like, oh my God, I want to know more about it. But you do the same thing with Bitcoin. And for some people, it just triggers discomfort. And I'm really curious to know psychologically where that comes from. Um, it could be aversion to change. It could be fear of the unknown. It could be, shame that people hold around money. And I guess this is leading into the question. You obviously, you work in a corporate fiat world and you're a Bitcoiner. And I want to know about how that transition for you happened. Do you feel, at home?
I mean, now at the moment, to be honest, it feels pretty good to be a Bitcoiner, at least within AMP. I'm not sure how people at other superannuation funds or in the finance world in general feel. But I think that's because AMP, was courageous enough to make that move into Bitcoin, even though it's a really, really small allocation. But we've seen really good returns on that. I mean, we put Bitcoin into our portfolios at a small allocation in May last year, somewhere in the mid 60,000s US dollar, and now we're at 122,000 as of this morning. So up like 100% almost. So of course that has been good, but also the Bitcoin space has evolved so positively with I mean, Larry Fink, the CEO of BlackRock, is like on CNBC basically every week shilling Bitcoin like a hardcore Bitcoiner would. But you have other people like Ray Dalio, Paul Tudor Jones, like really well-respected hedge fund managers talking positively about Bitcoin. JP Morgan just came out with a report where they compared Bitcoin to gold and how on a volatility and correlation adjusted basis, they think Bitcoin should be at 165,000, using gold as the anchor. Deutsche Bank put out a research report a week and a half ago where they evaluate whether they think there's a place for Bitcoin in central bank reserves by 2030. And their conclusion was that there was a place for both gold and Bitcoin in central bank reserves by 2030. And this is Deutsche Bank putting out this paper. So the whole finance world is starting to wake up to the fact that, Bitcoin is a legitimate asset. Bitcoin is potentially this, new reserve asset in a digital world.
Mm.
And a lot of people in the finance space are seeing that. So our investment team, they hear about that stuff as well. It's oftentimes because I share articles with them or like show them, oh, look at this paper that came out,
Yeah.
and all of that stuff. So they probably hear more about it than people at other firms would. But it wasn't always this way. So I started with AMP in 2022, and I would try to talk to people about Bitcoin here and there. The problem was that there would always be one or two people who would be super skeptical and critical of it and would shut it down straight away. Like even in like a bigger team conversation, it would get shut down very, very easily. The only thing that I found was that at the time there were a few grads working with us that had just come out of uni. They were really receptive to what I was saying because I guess they were young, they, had interacted with crypto before. And they thought it was fascinating to learn about the history of money and those sorts of things. But it was more a lot of the people who had been in traditional finance for a long time, who had, been in the industry for ages, where I noticed that it is actually, it's probably one of the biggest hurdles you can have to understanding Bitcoin is being in the finance industry for a very long time
Mm.
or in economics for a really long time, because Bitcoin questions or understanding Bitcoin, for understanding Bitcoin, you have to question all of the assumptions of everything that you've known up until this point, and you have to put everything that you know up until now aside and start from scratch. With Bitcoin, there's no prior knowledge that you can really use that's really helpful unless you were an Austrian economist, or maybe if you're like a computer scientist, it helps because you understand networks and cryptography and those things. But other than that, everybody starts from scratch with Bitcoin. And I find that that's a big hurdle for a lot of people in TradFi. But yeah, coming back to my experience, it really changed at the beginning of last year when the ETFs launched in the US, where we now have, I think it's 11 spot Bitcoin ETFs in the US. We have ETFs here in Australia now. They're thinking about like ETPs in Europe. And when that happened, like when BlackRock and Fidelity came out and started offering this to institutional clients and retail investors, that was a big signal to the whole world of finance that, hey, Bitcoin is institutional grade. And this is something that BlackRock is putting their full weight behind. So maybe let's start having another look at that. And that was also what triggered us at AMP to seriously consider investing in Bitcoin. Like Stuart, the guy that I mentioned earlier, my boss, he was pushing hard for that. And then we started looking at investment models that we could apply to Bitcoin, and how it would make sense within the AMP superannuation space, because obviously there's still a lot of risk involved, there's still a lot of volatility, and people were very skeptical. So we had to do it in the dynamic way using futures and at a small allocation that we did. But yeah, that's how it started. And since then, I've been running educational sessions within AMP, like started with the investment team, then the leadership team, then executive team, and even gave a presentation to the board of directors in May of this year. And everybody loves hearing about the history of money,
Mm.
stores of value from first principles. Like these are all things that nobody thinks about anymore. Like even people who are on the board of directors of a company like AMP haven't really stopped in their life and actually asked themselves, what actually is money? How did we get to, this form of money that we're using now, and what was before then, and why did we use gold at some point? But also, what makes a good store of value? What properties should a good store of value have? And
Mm.
how do some of the stores of value that I use compare to Bitcoin on the key properties of the store of value? And like that's that whole first principle unpacking of things that we take for granted in everyday life is something that we just haven't really been taught to do, and it's something that we don't learn because I don't know, it's just, currency is just something that we use every day to pay for stuff. So why should I even think about what money actually is and where it comes from? It's hard to forget.
Yeah. And it's fair. Like, I mean, I can understand why, obviously, a lot of these people went to university long, long ago before Bitcoin even came out. So we didn't have a different system. We didn't have anything to compare it to. And now, in order to understand this new phenomenon, we really have to zoom out very, very, very far historically to try and make sense of things. I just what I love about Bitcoin, just the layers that it requires to just understand it. You know, first you learn about Austrian econ a little bit, then you learn about hard money or sound money, then you learn about the monetary history, then you learn about cryptography. And the more you kind of like layer your knowledge, the more you just start to be in complete awe because like you said earlier on, all of those like attributes that make good money good, like divisibility, fungibility, portability, da 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 da. Bitcoin is now introducing new attributes to that. So like it's expanding the list. And like you said, things like censorship resistance, which might not be necessary in stable economies or you know, countries that have good governments, but many countries in the world don't have that experience. So having censorship resistance is really, really important in money. Like you wouldn't want to be in a relationship that's financially abusive. You also don't want to be in a relationship with the government that is financially abusive. I think that's fair, right? That's not a controversial thing to say. Um,
value density. I guess it's related to Bitcoin's divisibility in a way where another beautiful thing about Bitcoin is that you can divide one Bitcoin into 100 million Satoshis, which are the subunits of Bitcoin. And the thing is, technically with like the Lightning Network, you can even divide it one Satoshi even further. So Bitcoin in theory has infinite divisibility, which is perfect because if Bitcoin becomes more valuable, at some point we could run into an issue where maybe if one Satoshi becomes equal to 1 cent in Australian dollar terms, it still works. But if it becomes more valuable than that, then we got to start dividing Satoshis. But that's the beautiful thing with Bitcoin. You can infinitely divide it. And this is also where one common question or criticism of Bitcoin comes in. And I've heard this from really, really smart people. They then say, oh, but if Bitcoin is infinitely divisible, how can it be scarce? And initially, like on first thought, it's like, I kind of understand where they're coming from because they think scarcity just means that there's a limited number of units of it. But what matters isn't the number of subunits, but the number of the whole, basically.
Yeah.
Which again, like coming back to, I guess you could use the clock example, but an example that a lot of people here use is the pizza example, where if you have one pizza and right now it's split up into four pieces, if you cut every piece in half again, then you have eight pieces. But you didn't just create more pizza.
You
You
still
just
have one
created more
pizza.
slices. Exactly. You still have one pizza. And that's the same with Bitcoin. Just because you can divide it into more subunits doesn't mean you create more. It's
Yeah.
if you have to do that, you actually make what is there more valuable because, if you have to subdivide it, it means that the whole went up in value.
Yeah.
So Bitcoin is scarce. Bitcoin
Yeah.
is the most scarce, verifiably scarce thing that we've ever seen that can be used as money, which is truly mind blowing when you think about it as well. Because scarcity is the thing that we arguably value the most in money, and we've just perfected that. Like Satoshi literally perfected the thing that is the most important about money. So we might now have perfect money. And we're
Yeah.
alive while it happened. How incredible is that?
Yeah. And the other story that I like to tell as well is about the cypherpunk movement and how we're all today reaping the benefits of that movement, through having the ability to send emails privately to one another through work. We can keep corporate secrets, corporate. We can exchange love letters without the whole world knowing, and that is all thanks to the cypherpunks. And arguably their most important invention is Bitcoin. So yeah, I
Yeah.
do love telling that story as well. But going back to what we were talking about just now, in terms of what do you have any? I always hesitate to ask like speculative questions, but do you see Bitcoin becoming a medium of exchange in the next 10 to 20 years? Like, is that a possibility?
10 to 20 years. I mean, it's a possibility. You don't know. I don't think it will. To be honest, when I think about it, sometimes I'm not sure whether it will even happen in my lifetime, because these things can take a really long time. And we see how slow adoption, like while it is picking up a lot, when you zoom out and think about, okay, institutions are now coming into the Bitcoin space. AMP has like now a 0.1% allocation roughly to
Mm.
Bitcoin. Okay. But we're the only super fund in Australia. We manage, I think it's somewhere between 60 and 70 billion Australian dollars. But then there's like Australian super that is around 400 billion. And there's other really big super funds, that collectively manage trillions of Australian dollars. And within that, we're the only one with a tiny allocation to Bitcoin. So zooming out and looking just where all of the big money sits and how much of that money is invested in Bitcoin, we are so, so early. But another way to think about that is if anybody listening here thinks about their own family, their relatives and their friends, and how many people have actually invested in Bitcoin, substantial amounts, but also are able to articulate what Bitcoin actually is, because that's the more important thing. Like a lot of people buy Bitcoin out of FOMO, but how many of those people actually understand Bitcoin? It's, maybe 1 out of 100, probably less than that, maybe 1 out of 1,000, if we're being honest. So we're still super early with Bitcoin, but unless people all adopt it, or almost everybody adopts it as a store of value, it won't be able to move to becoming a medium of exchange, at least in developed countries with somewhat stable currencies. In developing countries, that might happen a lot faster. Their adoption might happen a lot faster. But then again, they also have stable coins like the USDT, which they probably prefer because it doesn't have the volatility. And they're not trying to store wealth for a long period of time. They probably need a medium term store of value and something they can use as a medium of exchange. So just thinking about it from that perspective, I think it'll take a long time until Bitcoin actually is a medium of exchange. And especially if the US is smart, which it looks like they currently are with adopting and pushing the adoption of stable coins, they might be able to keep the US dollar alive for a lot longer than it otherwise would. So I think they're understanding this whole field really, really well. And I'm pretty amazed by the Trump administration and how much they are able to embrace this and how much the tone has shifted from the last administration to this one in terms of crypto in general, but also Bitcoin. And like they're all politicians, so like we never know what
Yeah.
the true motivation behind their actions are. But it sounds like some of those people like properly get it. Like if you listen to like RFK Jr. or Vivek, even JD Vance, it seems like they do understand the value behind Bitcoin and why it's inevitable even for a country like the US. But then again, I think they're able to stretch out the US dollar staying alive for a lot longer than it otherwise would by adopting and pushing the adoption of stable coins. So I think we're still a long time away from that, but that's okay. That's how money monetizes, and people have to figure out that Bitcoin is the best store of value. And the more money they print, the faster it will happen, and the more tyrannical governments all over the world become, the faster it will happen. It's like the more governments do what they eventually always do, the faster people adopt Bitcoin. So the longer they behave, the slower it will be. We'll see.
Yeah. Yeah. I do also want to ask you, because we spoke just before about some of the common questions that people have about Bitcoin, that raise eyebrows. I've never heard the one about, divisibility, like have being an issue with the supply cap. That was an interesting one. But the most common one that I hear that I think is more reasonable question to ask compared to some of the ones that are just like, "Oh, it's a Ponzi scheme." I'm like, that has been debunked so much. I don't even want to entertain that anymore. Like, we're done with that. That should have died, years ago. The one that I think deserves an explanation is the intrinsic value one. So
Yes.
let's go.
And no, you're right. And this one is a really tricky one. And I think it's also the one that holds back people in traditional finance the most. And it's one that I get at work a lot, but not just at work, but even yeah, people who work in other industries, like friends that I have from uni, for example. The intrinsic value part is something that a lot of people get caught up on. And I actually used to get caught up on that a little bit as well. Because it's hard to understand because Bitcoin and the thinking around intrinsic value really challenges how we value all other things, basically, apart from gold. So what we usually do in finance is that in order to value assets, we look to some kind of cash flow, whether that's bonds that pay coupons, equities or shares pay dividends, or, at least you have a claim on the future cash flows of a company. So you can do like discounted cash flow models and things like that. With real estate, you have rental income. So with a lot of financial assets, we usually look at cash flow and then build some kind of cash flow valuation model around that to try to figure out what the true value of an asset is and what it should be and how it should be valued. And then obviously with shares, you've got growth expectations for like tech companies, so they are valued far beyond their cash flows because of that. But it usually anchors around some kind of cash flow. And then people look at Bitcoin and they say, well, Bitcoin's an unproductive asset. It doesn't do anything. It's just there. Like, what the hell is the intrinsic value of Bitcoin? But what I usually say to people, and I said this to Shane on the podcast as well, is that trying to value Bitcoin based on cash flows or through this typical lens that we use is trying to value a painting based on its dividend yield. Like it makes no sense. It's the completely wrong tool for the job. Um, but there is this misconception that you need some kind of anchor value to value something. And even with gold, because gold is also an unproductive asset, it doesn't generate any cash flows. So economists and traditional finance people struggle with gold as well. And the way that they mentally overcome that with gold is they say, oh, but at least gold has some industrial demand in electronics, in dentistry, and people use it for jewelry as well. But then when you really think about that, I think that's just a convenient argument that, helps them make sense of why gold has value. But first of all, the industrial demand for gold maybe accounts for 10 to 15% of the value of gold. 85 to 90% is just pure monetary premium. So if all of the industrial demand for gold went away tomorrow, gold would arguably retain most of its value. Then the second thing is the industrial demand, like electronics and dentistry for gold, only came around, I don't know, like 100 years ago, maybe a bit longer than that. Like electronics and dentistry are fairly recent phenomenons. But gold was highly valued for thousands of years before then. So when you really think about, the history of money again, like that whole argument basically goes away. So it's not the industrial demand that gives gold value. But that's where people then really start to struggle because then they're like, what the hell is giving this thing value if I can't even explain it with some industrial demand? And I think it's just a common misconception that a monetary good needs some baseline non-monetary utility to anchor its worth, when in reality, it's probably something else. It's probably just the monetary properties of it that we value. And we can attach value to the properties of something and the utility that we derive from that, not any cash flows or any industrial demand. But this really challenges the traditional view of value because this is like an uh, like it's kind of like intellectual property, at companies where or like data or something like that, where like companies like Facebook, a lot of their values derive from IP and data. Those are also intangible things. Like how can they be valuable? But they have a lot of value. But the same thing for a form of money, where monetary properties are what people value for money, and especially a store of value. And what matters there is how superior those properties are to other monetary goods. And then we can derive value for that. So I think intrinsic value in the traditional sense is probably the wrong way to think about it because um, with Bitcoin, maybe there's a new form of intrinsic value, and it's just the intrinsic properties that it has. And maybe verifiable digital scarcity is a new form of intrinsic value or utility, just not something that's physical in the traditional sense. And that's where people struggle a lot. So that's probably my answer to that is that
Yeah.
cash flows or other intrinsic industrial demand don't apply to Bitcoin, but that doesn't mean that it can't have value. It doesn't mean that Bitcoin is just the greater fools theory, like a lot of people say, where, oh, Bitcoin only has value because people think somebody else will buy it at a higher price in the future. It's like, no, Bitcoin has value because nobody can create more of it, and I can exchange my time and energy for it now, having analyzed this thing and understanding that it has by far the best monetary properties of anything that humanity has ever seen.
Mm.
And I'm able to stomach the volatility, but I'm pretty sure that it will maintain my value into the future and probably even go up in purchasing power terms. That's why I value this thing. And that's why I'm able to, or I'm willing to pay a lot of money for Bitcoin at the moment, or exchange a lot of fiat money for real money at the moment, because I value the properties that nobody can debase it, and that I don't have any massive costs and headaches associated with it, like a property. Like a property might be able to store your wealth as well, but you've got to manage tenants, you have to worry about maintenance costs, and you can't take it with you. If I wanted to move back to Europe next year, I couldn't take my property with me, and then there'd be massive costs and headaches involved with, trying to sell that and then finding something else in Germany. With Bitcoin, I just take my private keys with me, and that's it.
Yeah, yeah. And, again, intrinsic value is such an interesting one. And without even trying to go into the debate, which is what I used to do, is like, talking about subjective value versus intrinsic value. I
Mm,
think it is more important to meet people where they're at. So I wonder if there is a way as well to introduce intrinsic value, because obviously they need something to anchor to, and a real world tangible thing that you can point to. I guess the intrinsic value in the sense that they need to understand it. I wonder if that comes to like on-chain data, things like hash rate, how how many miners are
mm,
investing in infrastructure to maintain this network. What are the nodes doing? How much are they increasing by? The adoption rates, the way how many people are holding Bitcoin, like for longer periods of time, like longer than 12 months. You can get all of this information from. So would this be a better way maybe to
yeah.
intrinsing them away?
I no, I actually hadn't considered that, but I agree. Those are like the key metrics of Bitcoin, I guess, that you've just listed, especially looking at hash rate, miners, nodes all over the world, and unique Bitcoin addresses. Obviously, one person can have 100 different Bitcoin addresses, so it doesn't map to people one to one. But as long as those numbers are growing, and there's a good trend in them, obviously Bitcoin, the network itself, is growing, and I guess the energy input is probably another thing that you could look at, where obviously Bitcoin mining is highly energy intensive, but if more and more energy is going into the network and securing it, then maybe that is some real world anchor that it has, not just from Bitcoin back into the physical world, but also from the physical world into Bitcoin in terms of the value that's flowing into it.
Yep, yep. Nice. I wanted to now pivot a little bit and ask you just broadly, what are some of the pros and cons of investing into Bitcoin directly versus investing into Bitcoin futures? I'm not like a high finance person. You
Yeah.
mentioned like anything derivatives. I'm like, ooh, la la la. So I would just love to know from a quant.
Yeah. So there, for an institutional investor like us, there are a lot of advantages to using futures rather than underlying assets, but especially for Bitcoin, part of the reason why we did it with futures is that in the framework that we use to invest in Bitcoin, which is our dynamic asset allocation, it's like this basket of trading strategies that we have for shares, bonds, commodities, foreign exchange currencies. We basically trade everything through futures anyway because they're highly liquid. And the good thing with futures is you usually don't have to put up the whole capital of the underlying thing that you want to hold. So oftentimes, if you want to invest, let's say, 10 million into the S&P 500 through futures, you don't have to actually put up 10 million, but you might only have to put up 1 million to get exposure to 10 million. So it's almost like you're getting a leveraged exposure. That you have to manage through the margins that you have to maintain. So that's one of the benefits. It's less capital intensive, but also futures are highly regulated instruments. So ETFs obviously now are as well, but the Bitcoin futures have been around for a lot longer, and like especially the CME Bitcoin futures from the US are highly regulated. So for us, rather than trying to do some kind of self custody, or I mean, Bitcoin ETFs in Australia didn't exist at the time when we started investing into Bitcoin through AMP. Futures was really the only institutional grade exposure that we could get, and with futures it's easy to dynamically manage them the way that we do, where we can dial our exposure up and down because they are super liquid and trade, yeah, almost around the clock.
Yep, nice, nice. Okay, that makes sense. I'm just a simple woman and I like to buy my Bitcoin directly.
And I mean, to be honest, like not financial advice, obviously, but I think on a personal level, the best thing to do is to buy Bitcoin directly and to try to self custody at least a part of that, because unless you do that, you don't actually get a lot of the benefits that Bitcoin offers. Like you don't get the sovereignty, you don't get the ability to take it anywhere with you, as long as you're still holding it on an exchange, or even worse, if you're holding it through futures personally. All you're getting is price exposure to Bitcoin, but you're not getting any of the monetary properties of it. You only get the monetary properties if you self-custody it.
Yeah. 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 I like it.
Yeah.
And this leads in very nicely to the next question. In your personal life, do you wear your quant hat or do you wear your Bitcoin maximalist hat when it comes to buying Bitcoin?
Let's just say the orange hat is the one that I'm wearing more. It's the hat is based on conviction. Yeah.
Yeah, I love it. I
No.
love it. It's just, yeah, the conviction is so important. And the only way to maintain it is to continually keep reading, continue keep studying. And I've had moments as well, because I'm very new to Bitcoin. I've had moments where I'm like, am I right about this? Are there any risks that I missed out on? And I'm like, trying to find my friendliest OG and be like, this is what I'm worried about. They're like, oh, a 30% drawback. Oh, welcome to Bitcoin.
Yeah, yeah.
Wait till we hit 80. You're like, I don't think we will anymore, but yeah, hopefully we won't. But still your first experience can be quite emotional, but I think the best way to manage the emotion is just to keep studying. And
100%. Like, and this is what I say to people that ask me about Bitcoin all the time. It's like the best thing for me about Bitcoin hasn't even been investing in Bitcoin. Yeah, that's been good, but the best thing about Bitcoin has been everything that I learned along the way in order to try to understand Bitcoin as well as I can. And nobody will ever fully understand Bitcoin. Like this is the other crazy thing. It's like no matter how much you study it, there will always be something that you don't understand. Nobody has a full understanding. Nobody ever will, I don't think. But what you learn along the way makes you grow so much in terms of understanding how the world works, understanding how the financial system that we operate in works, how fractional reserve banking works, what the role of central banks is. As we talked about, like the history of money and how we got here, you can also go down rabbit holes about cryptography, information systems, energy use, energy grids, how Bitcoin mining can be plugged in to help finance sustainable renewable projects, how Bitcoin mining can help stabilize energy grids all over the world and can really push us towards this renewable energy that we want to move to. And like all of these other things, and like all of a sudden you're going down rabbit holes about thermodynamics and like all these crazy things. And you just start to see the world through a different lens. And that's why Bitcoiners call it taking the orange pill as well, just like in the Matrix, where Morpheus offers Neo the choice of the red pill or the blue pill, where, one is he goes back in the Matrix and doesn't know that, he's in the Matrix and he's blissfully ignorant. And the other one is that he stays awake to it and outside of the Matrix and knows what's going on. And as a Bitcoiner, once you study it enough, you've taken the orange pill and you never see the world the same way, which is a bit
yeah,
frightening, but it's also really empowering because all of a sudden you like everything that happens, like you read something in the news and you're you're as a Bitcoiner, you're like, yeah, no, I know what the agenda behind that is. And like you see everything a bit differently. So that's the best thing about Bitcoin is it's freedom money, but it can also free your mind to escape this fiat matrix that the world has constructed for us.
yeah, yeah. I absolutely agree with you. It is very empowering in that sense. It has completely renewed my thirst for knowledge, unlike anything ever before. And I genuinely enjoy learning. I genuinely enjoy reading and consuming content, and it feels empowering because I remember. I always used to be quite intimidated by older people, by more educated people, by, people in higher positions. And that is really no longer the case when it comes to Bitcoin, at least. And anyone with a position title or, in some sort of position of authority, no matter what they say, I don't feel like intimidated by it. They can say whatever they
Mm,
want, and I'm like, it doesn't waver my conviction, and that is a very empowering place to be in. So I couldn't agree with you more.
Yeah. Yeah.
It's also like the beautiful thing about it is all these like side benefits that you get, like very organically, it has lowered my time preference. And
Mm.
the longer I'm in Bitcoin, the longer that time preference kind of extends. I can't wait to start painting and, just going back to, studying just for the sake of it. Like just because I can, like just
Yeah.
random things like that. You
And
know,
it's almost like Bitcoin is like a mind virus that's positive. Like usually if we think about viruses, it's a negative thing because they make us sick. But Bitcoin is like a type of virus that you catch that makes you healthier and healthier over time, mentally and potentially physically for a lot of people as well, because you start to get this low time preference thinking. And if you really think about like everything beautiful and worthwhile in life requires this type of thinking. Like if you want to have a fit, strong, healthy body, that requires you eating healthy on a daily basis, moving a lot, sleeping enough, stretching your body, doing all the right things, but not just for a week or a month or 1 year, but like a whole life, basically. If you want to start a family, if you want to be mentally well, if you want to be in a good headspace, like that, those are all things that you have to take care of, that have to be day-to-day things, and that require you to think for the long term and not just live in the here and now and live a hedonistic, short-term thinking lifestyle. So Bitcoin is like perfectly aligned with what all the philosophers have always told us about wanting to live a happy and fulfilled life. And Bitcoin just is like a money that fits in perfectly into that whole idea. It's beautiful.
yeah, absolutely. I mean, I want to eat healthy and exercise so I can see Bitcoin become a medium of exchange. Is that so bad?
Exactly. Yeah.
I just want to be around to see how everything's going to unfold. Like,
Oh.
last question or second last question. I is there a person in your life or at work that you orange pilled that you're super proud of that saw go from like really skeptical to like, oh my God, this is the best thing. Thank you so much for introducing me.
Wow. I don't know if there's someone, I mean, my fiance, I think I managed to orange pill her a fair bit. But at work, I don't think that I've necessarily completely orange pilled anybody. Stuart is quite orange pilled, but he was a gold bug before discovering Bitcoin. He understood all of the underlying issues that need to be fixed with hard money already. But what I'm actually quite proud of is Shane Oliver, who I was on the podcast with. He used to be really outspoken negatively
Mm,
about Bitcoin. He used to be a big Bitcoin critic, and he's still skeptical. But as you would have heard on the podcast,
yep.
he's now very open to it potentially being this new form of digital gold, and for it to have a place at least as a reserve asset and as a store value. Like he's really coming around to that idea, and I
Yep.
think part of it is that we are having open dialogues within AMP around this. I talk about it all the time, and I guess through practicing that so many times, I've found a good narrative and a good way of communicating it to traditional finance people. So I think it resonates with him. But also to his credit, he's keeping an open mind. And like Shane has been with AMP for over 40 years, and he's been a Keynesian economist his whole life. And usually those types of people are unfortunately quite close-minded about Bitcoin because it challenges their whole worldview and everything that they've been preaching for 40 years,
Mm,
in Shane's case. But he somehow is able to keep a really open mind and to be open to innovation and to actually consider this thing. And he understands Bitcoin really well. You would have heard in the podcast, like
mm.
he actually understands a lot of the dynamics behind it quite well. For someone who's an economist and a bit older as well. So yeah, I'm really impressed by his ability to do that, but also proud of myself for pushing him a bit in that direction.
Yeah, me too. Me too. It's such an admirable quality to see someone, especially the longer they've been in a certain profession and the longer they've subscribed to a certain type of, economic school of thought, then the harder they might be to like undo that. So yeah, like I think it's a great quality for anyone to be able to sort of change their mind in light of some new information, even if it is happening, bit by bit. But a last question I wanted to ask you is, I have a lot of wonderful Bitcoin maximalist friends all over Australia who are in, pretty powerful positions within their companies, and a lot of them are banks and superannuations and whatnot, and they really want to start having that conversation and kicking it off at work with their colleagues and people who might potentially be able to influence some sort of adoption within their company. What advice might be for you to those people, like how to, I guess, come out of the shell and navigate potential criticism and potential, like no one wants to be ostracized, no one wants to be treated like they're weird, but yeah, what would you say?
Yeah. Um, it's tricky, and I think everybody needs to be aware of their particular firm and their particular environment and what the people around them are like. I think one thing people could do is, and they're probably doing this already, is have, one-on-one conversations with colleagues and people in their team just to gauge where people are at with Bitcoin. But I think one thing that wouldn't hurt anybody, and especially at a bank or within a superannuation fund, if you're either in the investment team at a superannuation fund or at a team that's, thinking about, the future and innovation within a bank, um, trying to set up something like a workshop around Bitcoin could be a good idea and super easy because, like, who's going to say no to you suggesting you running a workshop and dedicating your time and energy to doing that? Like, there's nothing to lose for someone who's your boss or in a position of power there. And then the way that you could sell it, I guess, in the superannuation fund, and this is kind of how I sold the first workshop that we did to our CIO, was that Bitcoin obviously is becoming this thing that is institutional grade. And I've studied this thing for thousands of hours. I would say I understand it quite well, and I understand the investment case quite well, and what I think more and more people are waking up to. But what I saw within the team at AMP was that there was still a lot of skeptics, but I thought that their skepticism was coming from not understanding Bitcoin well enough. So I went to the CIO and told her basically exactly this and was like, hey, like, I think this could be a massive opportunity for AMP. I've studied this for a long time. Whenever I try to talk to people about it, I find that the stuff that they say seems like they haven't studied it deeply enough, or they're still, stuck on the FUD from 2017. How about we just set up a small internal workshop, just the investment team? I pitch my whole investment case for Bitcoin and I answer all of the questions and criticisms that people have. And if they walk away from that workshop, we'll do a second one if they still have questions. Let's just get to a point where everybody's informed enough about Bitcoin, and then we can all make an informed decision about whether we want to embrace this together or not. Like, if you just approach it in a way like that, where you frame it as all that you're doing is you're trying to provide something for everybody else, but you're not asking for anything specific in return. It's like, it's not like, oh, we have to invest in Bitcoin, so I have to run this workshop so everybody gets it, and then we can go forward with it. It's like, no, let me provide something to all of you, because I think I have a lot of knowledge that I can share so that you don't also have to spend thousands of hours. And then come to me with all of your criticisms and questions. You obviously have to prepare for the typical questions and criticisms, but they're all the same ones. Like, there's nothing new under the sun when it comes to Bitcoin criticism. So be prepared for those and have a really good answer to all of them. Because what I found is that once you're able to answer the criticisms in a good way, it takes away that fear from people and people are more open to it. And then you can take it from there. And if you're in a bank, maybe you don't have that investment narrative that you can use, but even within the bank, you can say, look, Bitcoin is obviously becoming this big thing. There are now, I don't know, companies that are providing things like Bitcoin-backed loans or offering their customers to custody Bitcoin directly. Like, and maybe for a bank, even like another thing to get ready for, as much as we as Bitcoiners might not necessarily like the idea, is like stable coins becoming more of a thing, and getting your bank ready for a blockchain and crypto environment, and then having Bitcoin be a big part of that. Like maybe there's an angle that you can use there where you frame it as something that could be really important for the bank to be future ready and, to be innovative and forward thinking rather than just stuck in the present or the past. So I think if you just find ways of communicating Bitcoin and why people should at least listen to you talk about Bitcoin as something that can only benefit people, and worst case, you just don't do anything with it, and that's it. If you can frame it in that way, I don't see why people would say no to it. And then start small. If people like it, you can expand out, and who knows what's going to happen.
Yeah, yeah. Thank you so much for that. And the only thing I would add to that is bring some snacks, because people are a lot more open-minded when you're feeding them.
That's a good idea. That's a good idea.
All right, Jonas, thank you so much for your time.
Thanks, Anja. Really enjoyed it.
Great. Thanks. Bye.
Bye.
That's it for this week on the Honest Money Show. Big thanks to Bitteroo. Check out why more Aussies are choosing them at bitteroo.com.au. And shout out to our listeners on Fountain, where you can earn sats just by tuning in. If you appreciate the way we cut through the noise, you can support us directly via the QR code in the episode notes. Until next week, take care of yourself and your money.